Hello, everybody. It is Scott Riley, the Market Update Desk. It's May 19th. Mortgage One, NMLS number 157524. We've got a lot to go over. We actually had a golf weekend, so I got away for Friday, Saturday, and Sunday. Still was taking calls, of course, but it was great to get away up at Crystal Mountain and enjoy some fantastic weather and great friends. In the meantime, we did see the Pistons pretty much below the fourth game. The seventh game they decided not to show up for Game 7 at home, and now they are out of the playoffs. And the Tigers keep losing, unfortunately. Into the market, we had a lot going on. So the end of last week, we had wholesale inflation, which is producer price index, that rose a seasonally adjusted 1.4% for the month, significantly higher than expectations of 0.5%. And it was up from a revised increase of 0.7%. Now, the largest monthly gain since March of 22 when I look at the charts. Now, excluding food and energy, the core PPI, that accelerated at a rate of 1% compared to market expectations of 0.4%. Now, obviously, a lot of this is rising from the oil, gas, and utility downstream effects from what's going on in the Middle East. Some three-quarters of the gain in goods prices stemmed from a 7.8% jump in final demand energy. Going along with that theme there, more than 40% of that was traced to a 15% surge in gas. The services index, that accelerated 1.2%, biggest monthly gain since March of 22. Two-thirds of that was attributed to a 2.7% rise in trade services, a sign that tariff costs could starting to have a larger impact on prices, so it's moving through the system. The move also was buttressed by a 3.5% jump in margins for machinery and equipment wholesaling. So kind of across the board there, the wholesale report definitely did not do the market any favors, and pretty much all of it was worse than expected. Across the globe, we saw China's economy grow at an Japan's economy grow by an annual rate of 2.1% in Q1 2026. That's a beat from the expectation of 1.7%. In China, we saw industrial output that came in at 4.1% in April. That's a deceleration from March's 5.7%, and expectations were up to 5.9%. So pretty big miss there. In China, a lot of the population can do most of their investing via fixed assets like real estate. So they saw fixed asset investments contract by 1.6% in Q1 26. Expectations were for a positive 1.6. That's a 3.2% swing. And like I said, that's the majority of what the general population can and does invest in China. Their retail sales were also sluggish at plus 0.2%. The market had expected a full 2% rise, so 1.8% miss on retail sales in China. Domestically, we're seeing more earnings season flow through. Home Depot beat estimates both on the top and the bottom line. One of their comments where they indicated that consumers remain engaged in purchasing even with the elevated prices. Now later, actually Wednesday after hours, we're going to get the big report on earnings season. That's going to be NVIDIA. That's after hours on Wednesday. The market is always very hypersensitive on that. We did see the National Association of Realtors indicate that pending home sales index climbed 1.4% month over month in April to 74.8. That beat the 1% gain the market was expecting. So we're seeing more pent-up activity flow through into the active existing real estate market, and that's great news for buyers. Yes, rates are elevated, but they're still down 0.45% from a year ago, and we are seeing about a 19% increase increase since December in inventory. So little increase in inventory, lower rates compared to a year ago. Now, granted, that's nationally, it's a little bit more contracted here, but we are seeing some positive things for home buyers. Um, Year over year pending home sales, those were up 3.2%. Once again, suggesting that the pent-up demand is gradually coming back into the market. So it's a good time to get moving on everything. Also, another item we're following in the political realm is Kevin Warsh was approved to become the next Fed governor. And actually, we've talked about it before. The existing chair, Fed Chair Powell, is going to remain on the Fed. He's got 2 more years left on a governorship he can do. It's the first time since the mid 40s that's happened. 10-year Treasury's taken a beating today. There was a quick pace jump. We're up to 4.66 on the 10-year Treasury. That's the highest in 17 months. Also, the 30-year Treasury is sitting at about 5.15%. So lots going on in the market. It's going to potentially be a whipsaw week. We're also seeing things going on. President Trump tentatively called off a new strike on Iran. We don't know how that's going to hold, if it's going to hold. Lots going on. We'll keep on top of everything. Give us a call. We'll break down some numbers on the homes you're looking at, help you get pre-approved, look to help you get your offer accepted through our relationships in the market. Give us a call, 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.